Before we begin, here's how to earn continuing professional education credit for attending this session. Gain valuable insights by attending the podcast, then complete the assessment test to download your certificate. To do this, follow these simple steps. Click on the link in your description to access the session. Create a free account and attend the podcast. After the podcast, take the assessment test and download your certificate. It's easy, and it's free. We highly recommend checking out our subscription. Let's get started.
Very interesting. Very, very interesting. I love the answer. I love the way you're putting it out. I know you've been doing this for a long time. So, but for whatever words of wisdom you're giving across, believe me, it's something that a lot of listeners have not heard of. And, it's really, I'm pretty certain a lot of people are listening into this. They have got that thought going on in their mind now that, oh, I should have
Yeah.
thought of this, or probably I should look into this. Like asset protection, which you spoke about, which a lot of people don't really think about, but it
Yeah.
is something very critical. So thank you for bringing that, right?
Yeah.
Now,
Because if you wait too long and then you come to me later and then we move things around because we know you're in litigation, then
yeah,
there's this concept of fraudulent transfer. And you like transfer, if you transfer a property, the creditor can come and say, you were trying to avoid me and undo it. But
yeah.
anyway, so.
Well, but I'm critical points nonetheless, so thank you for bringing that out. Now let's pivot the focus on the people, because for starting a business you need to select the right entity, register with the state authorities, everything. That's paperwork. After the paperwork is done, when you start a business or when you are in the business, you will eventually hire people
Yeah.
to do the work, right? Now these could be employees, and this could also be contractors, right? So, and a lot of people don't realize the distinction between the two. They often end up making that mistake, like W-2s or 1099. So what's the number one legal trap that business owners fail in, that they fall into when they're hiring their employee or contractor? Welcome back to another episode of your favorite podcast we're trying to figure out. I'm your host Saul, and today's topic is one every business owner needs but often avoids until it's too late: business law. Whether you're launching a startup or scaling an existing business, you'd want to tune in as we dive into the legal foundations every entrepreneur should understand to protect their business and their sanity. I'm thrilled to have with us Salene Kraemer, an accomplished attorney, certified in business bankruptcy, and someone who has advised businesses of all sizes through critical legal crossroads. Salene, welcome to the podcast.
Good morning. Thank you for having me.
Absolutely. Now, before we get started, for those who are watching us live, if you have questions for Salene, drop them in the comments on LinkedIn or YouTube. Also, if you're looking to earn CPE credits, head on to my-cpe.com/podcast or grab the MyCPE One mobile app and listen and learn on the go. Now, Salene, before we jump into all the legal must-haves, I would love to hear your story, right? I mean, what pulled you into the world of law and more specifically working with business owners?
Yeah, so I became an attorney because I was involved in student government in high school, and I thought about a career in politics. And I know a lot of the people that I thought about, who do I admire? And it was
Mhm.
people that were great orators, people that write and read and research, and those are fundamental skills of every attorney. And I did at the time think I wanted to go in that vein with politics. I've completely abandoned that, and I decided to get an MBA before law school. So I had the business background. So when I was in law school, I focused on transactional work, and I fell into business bankruptcy right as a first year attorney. And business bankruptcy is, they call it a hybrid type of practice where you do both transactional work and litigation. So it's
Yeah.
been a really rewarding niche. And you certainly become a sort of a general business law practitioner when you are a business bankruptcy attorney. So
Yeah, no, I agree to you, but it's incredible, have you got into it? Not many have got that inclination during college about what they want to do, but I'm glad you came across that right opportunities. And I think a lot of our listeners will connect with that idea, wherein you connect with something wherein you're associated with something wherein you're building something with purpose, and not just always knowing what legal steps need to be to protect it, but like actually building something that has a purpose behind it, right? So very
Absolutely.
engaging, right?
Absolutely. Yes.
Now, now let's talk about getting started the right way, from a business standpoint. So, what are some of the most common legal missteps that you see when entrepreneurs form their businesses?
Let me just say this at the outset, and I can relate to my clients because I do run my own firm. I am the managing partner. I've worked for big firms and boutique firms in Wilmington, Delaware, and Philadelphia, and in Pittsburgh, Pennsylvania. When I started having children, I was like, oh, how am I going to manage all of this? And I also wanted to build my own book of business. And I
Yes.
have a business background from the MBA. I've always been entrepreneurial. Um, in the way that I run my life. And
Yeah.
I started my own firm 16 years ago. My daughter's gonna be 16 this month. And so
Hmm.
I can relate to small business owners with their business and the mistakes that they can make and missteps and how to avoid it. So I think it's made me definitely a better practitioner running my own firm, chasing work, getting paid, avoiding disputes myself with my clients. And so I just want to throw that out there. So I'm speaking from that level of experience. So with the biggest missteps, I do like this question because as a bankruptcy lawyer, by the time someone actually calls you and wants to give you money to solve their legal issues, it's you wish that you had talked to them, a year before. So,
Yes.
um, and I have some notes here, so I'm gonna look at that my research that in preparation for this podcast. But one of the major ones is for small business, is not forming a legal entity and not adhering to this, sort of just doing a sole proprietorship. You don't really see that often though, but people still do that, which
Yep.
generally I advise against. But also not if they buy a business, let's say they want to buy a franchise or they want to buy like a retail store. Or I had a client 10 years ago, she bought a bake shop. She spent hundreds of thousands of dollars. It was probably like $300,000 um,
Hmm.
out consulting an attorney, which
Yes.
was really foolish, or an accountant. And they
Yeah.
agreed on the price. They agreed upon the price without getting any kind of valuation. She was believing in the good faith of the person selling it. But the person selling it, of course, is motivated they probably have personal liabilities they have to take care of, taxes, personal guarantees. Like it's not as, that was her biggest mistake, was not consulting and paying the right price for what she was buying. Um, the other issues too are when, let's say, there is litigation and now they're my client and there's a lot of different moving parts and someone's trying to sue my client, or I'm trying to sue a business. I look to see if I can sue the owner also, because they've sort of pierced the corporate veil and they haven't protected that legal entity structure by commingling personal and business funds, by
Yeah.
transferring money from their business to other businesses they own because they're short of cash. I mean, when people
Yeah.
are short of cash, they do just desperate things. It's normal, it's human nature, but then they do things that are fraudulent in nature. They're not intending to be so, but you don't necessarily have to have intent. It can be constructive fraud. And I see that a lot. And that's not something, you want to consult with your advisors. You should always be in contact with your attorney and find the right one that you have a good relationship with, that you don't mind, they're at the right price and they're going to advise you, even if it's just like a quick 5-minute phone call. Should I do this or not? And your accountants are like
Yes.
key. So I see small business owners, they're just trying to get things off the ground. They're trying to pinch every penny. Trust me, I've also been there. But um especially when you're handling significant transactions or something that smells a little fishy and you're like, should I do this or not? Definitely try to reach out. I also tell my clients that they should have a informal board of advisors. So there's like
Hmm.
a formal company, and we'll get into this. You have a board of directors or a board of
Yes.
managers, and they're like formal members of management of your company per your bylaws. But you could
Yeah.
also have an informal one where you
Yes.
have just like trusted friends or colleagues or someone like that owes you one. Maybe they're a mentor or whatever. Let's say even just like 3 people. And I wrote a blog post on this. I'll have to send you my links to my blog so people
Yeah.
can.
Yeah.
Yeah.
I'll-
But I say like entrepreneurs and a lot of women. I mean, but I'm female, so that's my perspective. Like women just try to do it all on their own. I call it operating in a silo, where they're just
Mhm.
trying to like do their best and manage their childcare responsibilities, but not reaching out to colleagues and their male colleagues, their mentors, anybody. And that's a huge mistake because the learning curve could be so much shorter if they reached out, but we
Yes.
tend to not do that. So I encourage my clients to have some people lined up that they're going to talk to. Join some net business networking group where they can have a coffee once a month and be like, this is what's going on in my business. I have Zoom. I mean, with Zoom now,
Mhm.
got my broken hand here, but I have with Zoom, I meet every week with other women law firm owners on Mondays, and we have a mastermind group, and
Uh-huh.
we talk about legal issues we have, which is really
Mhm.
it's free because we're all giving each other. I mean, you can pay people and be a part of these, of course, but
Yeah.
I encourage people to do that. So
Do you want to earn CPE credit? Take this course of MyCPE 1 to earn free credit. Click the link in the description to get started.
Well, I mean, like, there's a lot that you put out, but I completely agree to everything that you said. It really tracks.
yeah,
This was some time back, but I had back then, I was not really looking into business law, but there was a clutch survey that had also said that, almost like 60% of the small businesses, they don't really consult an attorney or an accountant when even forming an entity. And, that's a big deal, especially when you talked about, the entity structure. They
yes,
they're not it's not really happening, but it's a very critical thing,
yeah,
because people just think that they could just be a sole proprietor. They're not realizing that that's a different entity structure. Your personal effects are getting affected because of it, and you want to have that distinction between personal, business. God forbid, if at all, nobody wants to run a business from the point of view that I'm going to get bankrupt one day. But
absolutely,
you want to keep that clear line of distinction between what's personal, what's business. And the entity structure is like, I guess, the very first integral stepping stone for every businesses that
absolutely,
they need to consider. you know
yeah,
and and coming to that, this is something that I also hear a lot of people. I see a lot of YouTube videos on it as well. They're like, what entity structure, I mean, should be there are people who are saying that you should choose an LLC. There's some who
hmm,
are saying you should choose an S corp. There's some who are saying you should choose a C corp.
yeah.
But so when someone's choosing between these three structures like LLC, S corp, and C corp, I mean, there are others, but these three are most commonly being talked about. What should they
Mhm.
be really thinking about when making a determination which one to go with?
Yeah. So the default is the simple LLC, and that's what we tend to form most for most small businesses. But it really is a function of it's a tax-driven issue. I always push this back on the person's accountant. So if you don't have a business accountant, you definitely need to get an accountant that is a business accountant. And
Yes.
some of it can depend upon their own personal financial picture of the owner. So it depends on what other assets they own, like what's going to be the best for that business. Is it just a sole member? I mean, if it's a sole member, it's generally like always single member LLC.
Right.
I myself, I'm an S corp, and
Mhm.
um, so like some of the considerations are the number of owners, the expected income, the type of business. Is it a professional service or not? Does your state require you? If you're, I solely own my firm, but are there more than one? Are they? Is it? Do you have to have some kind of entity in that state that's is for professionals, like a limited liability, like a professional, a PLLC, a professional um,
Yeah.
liability corporation, and the tax issues, and basically also plans for raising capital. Do you intend to bring other people on
Yeah.
to contribute? And how is that going to look like? And that's where the distinction between partnerships and limited liability companies come in. And what kind of flexibility do you have for saying, well, I'm putting in more sweat equity than, but you're a passive investor. So what should we do? It is a complicated analysis. So I would
It is.
encourage people to consult with a business attorney that handles these routinely And if it's a really complicated transaction. I mean,
Yes.
other clients also, if they're just like starting a small business and like a cleaning company, and they're like, I need an LLC. I'll be like, just go to LegalZoom because they can do it easily. I mean, anyone can do it themselves, but they can do it easily for like $400 or $500. But I do think it's a critical step in finding somebody, a trusted advisor that, like with us, like we'll do a flat fee. We really don't do them that much anymore because um, it can be time consuming. But let's
Yeah.
just say most business law firms do. They'll do a flat fee for like $1,500, $2,000, $2,500. I don't know. But they'll do all the ancillary documents, like get the EIN, do
Yes.
a simple operating agreement.
Yeah.
And then like with us, we used to do like on a quarterly basis, we would sit down for the year if it's a startup and
Mhm.
just talk to the owner and be like, how's it going? Just to be that advisor and to know that they have someone trusted in their corner. So I think it is an important step if you plan to be around for the long term. If an entrepreneur is like, I'm like dabbling just to see where I can go with this. I mean, you may not want to incur legal fees and just do the legal Zoom thing and try to get going, but definitely get that accountant. You're gonna need the accountant. But if you think you're really doing substantial investment and yeah, I would get somebody that knows what they're doing.
Yeah.
And for sure.
And especially like the point that you said, about, like if you're really considering about having external capital being brought into your business, maybe not now, maybe in the future,
Yeah,
because you got to think about that because that really impacts the legal entity structure. Because I completely agree to you on that. It's not like a lot of people also have this misconception that once I've formed an entity structure, like I start a business and I'm like, okay, LLC is the de facto thing. I'll go with it. I did all the consultation. Maybe I used AI because today everybody's asking AI.
yeah,
And AI kind of gives you something and you're like, all right, I'll do this. I'll do this on my own. I'll go to Legal Zoom or maybe Atlas or whatever all those things are like
yeah,
plug and play kind of setups. You just pay the money, give them the documents, and they'll get everything done for you.
yeah. True,
That's it. But then
true.
eventually, you a lot of people there's this misconception that once I've formed it, I cannot change it.
That's not true. That's not true. I mean, you can elect S corp tax treatment even if you're an LLC. There is a
Yeah.
certain time frame within which you have to do that, but you can change. Um, but it's better to get it right from the beginning if you can. Like I want to say on the S corp end, and is if you plan to be an employee of your own firm and have other employees, generally we do elect the S corp treatment. I am actually an S corp with my law firm because I'm on the payroll. I take a salary, but you can minimize the taxes you're paying,
Yes.
self-employment tax, by taking a salary, a reasonable salary, and then also getting draws. So yeah,
Yeah. Yeah. I mean, it was very, this is very many years back, when I had started to learn about these entity structures. And that's when I came to know that S Corps have got members and C Corps have got shareholders. And I'm like, huh?
yeah,
For a moment, I'm like, oh, aren't they the same thing? And then like, no, I mean, they are, but they, in a way, they're not. But I mean, we're not here to talk about that. But it's
yeah,
funny. These are very small things that we hear about. We don't take notice of it until many years later when you're into it, and then you realize that, oh, I should have probably done that. Which comes back to your advice that whenever you're starting a business or wherever point you are at, if you haven't consulted an attorney and an accountant yet, you
yeah,
should, you should definitely do that. And
yeah.
but you being in this business, and a lot of people come to you with issues, especially when they're at that stage where they'll probably need to go for bankruptcy. Have you ever come across people who try to do this stuff through, I don't know, Legal Zoom or Atlas or something in the past, and then they come back later up calling you that they didn't do it right?
Well, um, in terms of a bankruptcy filing or like a distress situation, um, you don't really see that many mistakes. People generally have their entities formed. You
Mm-hmm.
do, however, see tons of commingling of funds because cash is tight.
Mm-hmm.
So, and it just gives a door through which a creditor can go to sue you personally. So, one of the other
Yes.
things I wanted to say too, if when you're starting a business and you're starting to sign loan documents as a guarantor, which most usually if you own 20% or more of a business and you're getting a loan from a traditional bank or from wherever, they will ask the owner to personally guarantee. They may ask you to get your spouse. Like if you
Yeah.
sign a commercial lease too, I mean, it's the most favorable thing for the landlord to get the guarantee. But if you can avoid it, you want to do that. And that's where and getting like a person like an attorney to get in there and negotiate on your behalf, it is very important because if things go sideways, then a bank will sue on the guarantee. And then your wife is not, or your husband is not going to be happy with you if you just roped her into your financial mess. And um, I mean, there are ways, and then like, posting your home and things like that as collateral. She's not going to be happy about that. But, you want to get advice on this. And there are maneuvers to protect your assets. So that is definitely a component that we do. We do asset protection planning. When, let's say, I represented a doctor and his business was going sideways. So we looked at his entire asset picture and how was it titled, how much equity's in there, what other liens are ahead of this new lender, and what if things go sideways, how are we going to protect the equity and wealth that you have? So it's really important, especially if you have multiple businesses and or you're not married or whatever, to get advice on that.
Access latest and trending CPE courses with my CPE One Unlimited Access subscription. Subscribe now.
Very interesting. Very, very interesting. I love the answer. I love the way you're putting it out. I know you've been doing this for a long time. So, but for whatever words of wisdom you're giving across, believe me, it's something that a lot of listeners have not heard of. And, it's really, I'm pretty certain a lot of people are listening into this. They have got that thought going on in their mind now that, oh, I should have
Yeah,
thought of this, or probably I should look into this, like
yeah,
asset protection, which you spoke about, which a lot of people don't really think about, but
yeah,
it is something very critical. So thank you for bringing that, right?
yeah.
Now,
Because if you wait too long and then you come to me later and then we move things around because we know you're in litigation, then
yeah,
there's this concept of fraudulent transfer. And
yeah,
you like transfer, if you transfer a property, the creditor can come and say, you were trying to avoid me and
mm,
undo it. But
yep.
anyway, yeah. So,
Well, but critical points nonetheless, so thank you for bringing that out. Now
sure.
let's pivot the focus on the people, because for starting a business, you need to select the right entity, register with the state authorities, everything. That's paperwork. After the paperwork is done, when you start a business or when
Mhm.
you are in the business, you will eventually hire people
Yeah.
to do the work, right? Now,
Yeah.
these could be employees and this
Mhm.
could also be contractors, right?
Yeah.
So, and a lot of people don't realize the distinction between the two. They often end up making that mistake, like
Mhm.
W-2s or 1099. So, what's the number one legal trap that business owners that they fall into when they're hiring their employee or contractor?
Yeah. Well, even before we talk about the independent contractor employee distinction, which is something people do make a mistake on, and it can lead to significant tax penalties and labor violations. If you hire someone and they're not working for anyone else and you're just paying them as an independent contractor, you're not paying taxes, employment taxes, like
True.
Social Security, but you control, there's a factor list the IRS sets out. You could chat GPT it, but like, is this person an independent contractor or an employee? How much control do you have over their schedule, when they work, and telling them, what their duties are? Do they work for other people? It's better to err on the side of, well, this person's an employee, I'm going to pay them their employee tax. So then you have to calculate that into how much you're paying them, and what your payroll will be. If it's an independent contractor, they will be responsible for paying their own taxes on their income, and
True.
you make it very clear that that's the case. But one of the things I see, and I'm also speaking from personal experience, the biggest mistake I think entrepreneurs make when they're hiring is just being too quick to hire and too slow to fire. So, like, as a small business, you're like, I just want to get this off the ground. I need people. I've done this with administrative staff. I need, or in paralegals for myself. Um, and then you hire like a friend of a friend. It's like,
Yeah.
this person really isn't qualified. Why did I hire so and so's grandma to work at my business, which is my baby, it's my passion, it's how I put bread on the table. And I've
Yeah.
got, I just was way too quick to hire because I didn't want to spend the time doing it. So that's a mistake, because then you train them and then they leave, and you just wasted all that time and money on somebody that's not going to be there and wasn't really qualified. So I say take your time, and then if you see some bad things going on, don't hesitate to fire, because um, again, a person can be toxic and permeate your entire organization. Although we're going to get, so what should you do? I know that's a question that you have for me, is when you need to fire someone, what should you do in advance?
Yeah.
Answer the question. So basically, paper trail, paper trail, paper trail. So
Yes.
you need to, if you're warning the person that they're not complying with your certain policies, I've got the list here of you gotta love ChatGPT, of like what policies lead to the most amount of litigation with employees. But you should definitely have a employment handbook, and you can get ones like online that are,
Yeah.
you should have something. If you have a few employees, that it outlines sort of the grounds for termination, and kind of notice and benefits, and it's better to get that in place if you can. Um, Also with I've been advised with my legal coaches to just have like a scope of duties agreement for each employee. It's not even an employment agreement. It's at least a scope of duties. These are what I expect you to do. This is what you're responsible for, and have them sign it. But you can have a formal employment agreement. Like lawyers, for example, most law firms do not have employment agreements for lawyers, with covenants not to compete and things like that. Just depends upon the industry. But it's better to talk to your attorney. It's better to paper what your expectations are, and paper and evidence how they fail those expectations. What is your notice and like sort of warning system, and making sure you comply with that, making sure you comply with any unpaid wages. You don't want them to have claims against you for unpaid wages, but yeah.
Yeah.
So those are
And
some of the things I would say.
you certainly spoke about a very interesting point about 1099s, that how much are you able to control their time and when they're getting the work done? Because I guess that makes it very interesting. A lot of, because of people think that, oh, if he's an employee, I gotta deduct taxes and I gotta submit. If it's a 1099, I gotta pay no taxes. I pay him the money and I'm done with it. But that thing that you pointed out, because that's something that I think IRS has also started looking into a lot. The DOL has started to enforce a lot. That is it just a 1099 with you? Because that
Yeah.
could make a difference, right? I mean, like, if you could just enlighten our viewers why that is a very critical thing for a
Yeah.
1099.
Yeah. I'm sorry. What was your question again? Why is it
Like
so critical?
when you're engaging with a 1099, you want to look into whether are you controlling the time that they're contributing to your business. That's a very interesting classification for a 1099, because if you're controlling that, that could, your classification of that person as a 1099 could be incorrect if he's
Absolutely.
the, but just for our users, how is the how do you distinguish when you're hiring a 1099? How do you
Hmm.
make sure that you do not commit that mistake of
Yeah.
falling into that trap, and IRS says no, it's not a 1099, it's employee, so now you got to pay taxes and penalty and what's not.
Yeah. Um, for me personally, and I do have multiple people working for me, and half of them are employees, half of them are 1099. For me, do they work for someone else? A lot of attorneys that work for me, they're up counsel. They also have their own firms, but they have an area of expertise that is synergistic with mine. I want to use them.
Yep.
Um, but they have their own thing going on. So it's not just me. Um, so, and yeah, I think that's an important. There is a list of factors. I don't have it pulled up for me, but the IRS has a certain, and I'm happy to provide a link to that or whatever. We can
Yeah.
put it in this
Okay.
podcast. It's
Yeah.
it's
Okay.
yeah,
Okay.
IRS will have it has it there. And I think this issue is becoming more prevalent because people are remotely working and not necessarily an employee of one company now. They're like freelancing for multiple people,
Yeah.
kind of working and carving their career as they wish, which is kind of cool. So
I mean, look, misclassification is a big one. It's something that has been going on. The IRS has started to crack down hard on that. And if you're not clear on the 1099 or the W2, you could be sitting on a tax bomb. I wouldn't say a time bomb. I would say a tax bomb, because
Absolutely.
you know. But
Yeah.
you spoke about the documentation. We already spoken about how to protect yourself, about before firing somebody. I like the point that you put out, that you hire too quick and you fire too late. I like that point that you made.
Yeah.
It's a very interesting point. But before
Yes.
firing, you talked about paperwork, paperwork, paperwork. And I guess we want to talk about that, because policies, because those are the risk management, effective risk management strategies. It's not
Mhm.
something that just big companies employ. That's not true.
Yeah.
Everybody needs to have policies in place. And you
Yeah.
spoke about some policies. So what are some internal policies you believe every small business should have, even if they're just like very small, like?
Yeah. And I'm going to talk about these policies. I pulled up a list of them. There's a bunch of them. Um, with the yeah, we went over just improper termination and firing without documentation, misclassification of workers, and failure to prevent harassment or discrimination. So you have to have like an anti-harassment, anti-discrimination policy. I'll get
Mhm.
into that, and then just not paying overtime or minimum wage. We already talked about that. So with the policies, bear with me 1 second.
No
It
problem.
was a
Take it.
long list.
Yeah.
Um, the
Because you
biggest one,
spoke, you spoke about a handbook. I guess the handbook has got all of this, but I guess the you talked about the discrimination and harassment policy. I think that's one critical one. I think
yeah,
the thing is, I guess, the the overtime one, because
overtime. That would be in the handbook.
yeah,
Um, I chat GPT this earlier, way earlier this morning. But one is just sort of like a mission statement and
yes,
sort of an ethics policy. And like this is kind of what we believe in. If you're not consistent with this, it's grounds for termination. Um, yeah, can we hold on 1 second here? 'Cause there was a long list. Um, me personally, I mean, I'm a small business, right? So I still don't have an employee handbook, but I only have a few employees. I had one drafted. This is just what small business owners get into. You know, I do have a mission statement. But we don't have a physical office either. We're all remote. Pull this up here. Give me 1 second. Oh, here we go. Okay, this is a really good list. Okay, yeah, like I was saying, the code of conduct or an ethics policy, setting expectations for employee behavior, integrity, and compliance with laws. And then anti-harassment, anti-discrimination, clearly defining prohibited conduct and outlines procedures for complaints. Protects against EEOC claims and creates a safe workplace culture. If
hmm,
you're in person, for sure. I mean, I think regardless, having all of these in place, I do not. I not craft one, but um,
hmm,
and then the employment practices and handbook covering hiring, discipline, termination, benefits, and leave policies, providing consistency in HR decisions and defending against wrongful termination and wage hour claims.
hmm,
Whistleblower policy, encouraging employees to report illegal or unethical behavior internally. It helps detect issues early and satisfies Sarbanes-Oxley. I mean, I don't have that, but it's always good to have. This is interesting one: document retention and destruction policy. It really
right,
depends upon the nature of your business, but from a litigation standpoint, you want to make sure that business records and it's properly handled, and then there's a paper trail in the event that you're ever in a dispute with a client. This happened to me. I had a major dispute with one of my clients, and then now I had to go through, dig up all the emails, dig up all his documentation, making sure that you have um, like I use Dropbox, but I
yeah,
should probably migrate to something more formal. But in any event, you have to have something that's safe too and ensures privacy. So that's the next policy. It's
all right,
cybersecurity and data privacy policies,
hmm,
um, addressing data handling, breaching any kind of breach, and what kind of response you will have, and employee obligations. It's critical for avoiding data breach litigation and regulatory fines. And then
no,
social media, yeah,
mhm,
social media policies and communications policies. It's interesting. When I first started my firm, I started doing these, and I was on the speaker circuit about how to utilize social media for business development, but also how to avoid the pitfalls of it. I mean, those problems are still here. I think they're probably, I mean, obviously, in the last 12 years, I mean, I primarily market my firm on social media, LinkedIn and Facebook.
yeah, Yeah.
Um, you regulate how employees represent the company online and in public, and prevent reputational damage and unauthorized disclosures. Sort of what are their penalties if they do make an unauthorized disclosure, and sort of addressing that in advance.
All right.
Um,
Okay. Well, I
yeah,
guess that's a pretty long list. I mean, like I know, but
and yeah, that's pretty good.
yeah, but a good starting point would be in order to at least to have a mission statement, have a ethics policy, a code of conduct, and a proper anti-discrimination, harassment, so a policy, because those are, I think, something bare minimum, irrespective of what kind of a business you are, bare minimum, and the
Absolutely.
policy to protect against EEOC, and have those things all protected. So I guess that's a bare minimum thing that you want to have,
Yeah.
and God forbid, please don't use AI for this. Consult an attorney or for this. But
Here's what I
I
told
mean, like,
AI. I'm like, you can research issues, but you should, that'll save your time with your lawyer, but
yeah,
just confirm with the lawyer at the
yes,
end of
absolutely, no,
yeah,
absolutely. And
yeah,
I mean, like when you're doing a business, it should never be we'll figure it out later, because that approach, it really doesn't work when there is a lawsuit or there's an internal issue on your hands. You gotta be prepared, so you gotta take these things into consideration. But,
absolutely.
and because the word compliance is something that makes a lot of business owners just glaze over, but it doesn't really, but it's not something to be scary. I mean, so what's your
Yeah.
advice for staying compliant when
Yeah.
without hiring a full-time legal team?
Yeah. For me, and what I mean, I would chat GPT to all these questions to see like
Mhm.
what would people mostly say. I mean, for me, I try to work on my business. They said, oh, once a quarter, you should make sure you're compliant with all your regulations and tax auditing and your bookkeeping and things like that. I think once a quarter is a good goal, but I know at least my with my lawyer coach that I've used, she's like once a week, and this you need a calendar and block off time just to work on your business, and
Mhm.
you should definitely have that on your list of things, not just marketing and um, accounts receivable, things like that, getting paid, but also just making sure that you've got all your I's dotted and T's crossed with your compliance. It depends on the industry, but yeah,
But and that's a very interesting point, because when you're a business, you are so much hungry for growing the business. You spend a lot of time into marketing and sales and accounts receivables and all that. I mean, you do have a policy that you put it out, like it's there, and then but to remain in that box wherein you're like, oh, I've got it, so it's running well. It's good to have that check, just
yeah,
to have a check into the dry run to make sure those policies are true, the processes are aligned to those policies, and everything is running well.
yeah,
Because, and it's a huge thing, it does sound like, once a quarter is okay, but it's a huge thing. It doesn't have to be boring. Good compliance can be boring for a lot of people, but
right,
hey, if boring keeps you out of trouble,
yeah,
you might as well do it, right?
right.
So,
Yeah,
all right. So now, I'll just, before I let you go, because I know we're almost coming towards the end, but I just want to touch on a hot topic that has been doing rounds lately a lot: raising money. You know, so what are some, and especially when you're into small businesses, you end up raising money a lot of times from friends or with family. You do that a lot. So,
yeah,
what are some legal landmines that you could be getting on when you are raising money from family and friends?
yeah. So as a business bankruptcy specialist, I see it at the end of the day where the businesses there's not enough cash. It's a cash flow crisis. So they're not able to pay their friends and family back. But
Yeah.
now they've got a bunch of other loans. Maybe the merchant cash lenders were crazy during COVID, and you've got all these people coming at you. But there you've got your best friend and your mom that you took $100,000 from under a loan. But one, did you paper it? Or say you personally put in money yourself, you're running the business and cash is low and tight. So then one of the biggest mistakes I see are owners going into their 401k accounts, their retirement accounts. Like if anybody gets anything out of this podcast, before you dip into your retirement accounts, please go talk to a business attorney because retirement accounts are bankruptcy exempt. Say if the owner at the end of the day they can't, and they owe hundreds of thousands of dollars and they have to file a personal bankruptcy case, which is what we try to avoid at all costs. Like we have to, you have to. It's just part of
Yeah.
it's part of doing business. People shouldn't feel
Yeah.
shame about this stuff. It's risky. It's just you got to move on, move forward. But the bankruptcy, you could have $1 million in your retirement accounts. They have to be specific types of retirement accounts, like even college accounts. They're all bankruptcy exempt, so no creditor could touch them.
Mhm.
Like the IRS, they will tell you that they will try to. Like, say you get some creditor that's trying to hound you and like, I see you have this, or a bank. They'd be like, you're sitting on $500,000 in your retirement, just take it out. But you actually don't have to do that. They would be exempt. So I would definitely consult an attorney before that. Um, but with respect to friends and family, one did if it, or you put money back in. The question then in a bankruptcy court, when a business files bankruptcy, you list your assets and liabilities and you categorize the debt. Is this secured or unsecured? And if it was secured, like when did it become secured? And it's you have a pecking order of who, like say there's a finite amount of $1 million and there's only so much money to go around. Well, there's a pecking order of like the taxes get paid first, priority wages, and then
Yes.
secured claims.
Yes.
And if you have a judgment, then you can become a secured creditor, and then unsecured creditors, and then equities at the bottom. It's a waterfall. So
Yeah.
you say you put money in and you didn't paper it as a loan. So it looks like you just contributed to your equity. So you're not
Yes.
going to get paid back, and you're instead just an equity holder. I mean, it
Right.
is still an insider loan, but if it's legitimate, and you could also get it secured by getting like filing a UCC on the business assets to for a blanket lien on the collateral, then you become secured. There might be people ahead of you still, but at
Yeah.
least you're in the pecking order and have secured that. Like I see a lot of people not papering that and not securing the loan, also not getting, let's say, excuse me, like a mortgage, a deed of trust in West Virginia, it's called a deed of trust on a home as collateral. You should do that to secure the loan if it's to your mom or whatever, to make sure that they're in highest priority as they should be. So
Well,
yeah. Also, in terms of getting people to invest, so this is the world of securities law. It is a
right.
niche. It's actually what I started practicing my very first year as a lawyer. It is a niche. There's blue sky laws for each state, and the federal SEC governs transactions when you're asking people to give you money to invest in your business. There are disclosures you have to make, and it's a question of also what level of sophistication does that person have? Do they understand what they're signing? Do they understand the risks of the business and what could go awry? They have to make certain disclosures. So you definitely have to talk to an attorney who is specialized in this area, um, and
Okay.
make sure you don't run afoul of those rules. So
All right. Well, Salene, as we're coming towards the end, I really
yeah,
love some of the gems that you have dropped into this. I love the fact that you said that, like a lot of business owners, they make the mistake of hiring fast, but, firing slow.
yeah,
Especially the point that you said that, retirement, retirement accounts are exempt from bankruptcy, which is, I think, very
yeah.
interesting. And also for the fact that, you certainly put it, but I did catch on that equity gets paid last
Mhm.
when it's
Yeah,
bankruptcy. So
yeah.
that's something that you want to be very careful about. But this was great.
Yeah,
So
it does depend on the type of chapter if you can get paid at all, but because there's multiple different chapters. But yeah, it's thank you for that, and I'm happy to be here. Yeah.
yeah, absolutely. Well, so thank you, Salin. Thank you once again. This was packed with value and clarity. And to everyone listening, whether you're in year 1 or year 10 of your business, if you don't have a legal advisor, this episode is your sign to get one. So we'll drop the links to Salin's firm and the helpful resources in the show notes. So thank you so much for joining us on We're Trying to Figure Out. Until next time, take care and keep innovating in everything that you do.
Thank
Cheers.
you. Bye bye.
Access latest and trending CPE courses with my CPE One Unlimited Access subscription. Subscribe now